Just whose home is it anyways? Welcome to this week's Industry Leader Update. Have you ever had a loan that was shot down by the borrower's children? Well, it's not uncommon. In fact, such a scenario prompted a recent article in the New York Times which was entitled Reverse Mortgage Realities. Now, the article opens with a statement that children do have reason to be skeptical today of their parents taking out a reverse mortgage. That is, unless they plan to stay in their home indefinitely and also can meet the ongoing property obligations. However, elder law and reverse mortgage experts say they frequently encounter resistance from children who are less concerned about the actual terms of the loan itself than about losing their presumed inheritance. And those are the operative words, presumed inheritance. In other words, just whose home is it anyways? Is it the children's or the senior homeowners? Now, most of you watching today would say the latter. Yet, this is a common issue encountered by most reverse mortgage professionals. We have senior homeowners who need relief from existing mortgage payments or increased cash flow, and then children who block the loan to protect their own self-interest. Now, to navigate such an emotionally charged situation is much like walking through a minefield. One misstep can be costly. And as a child of an elderly parent myself, I know that communication is key long before a reverse mortgage is even considered. Do the children know mom and dad's financial situation, or are they aware that they may be struggling each month just to make their ends meet? Now, even with borrowers who regularly communicate with their parents, children may find that their parents are reluctant to share that they are struggling financially. And this leaves many originators with the thankless task of uncovering the true state of mom and dad's retirement preparedness. Now, the idiom, "don't shoot the messenger," does come to mind. Deborah Ball, a New York elder law attorney, says this: "A lack of communication can lead to a rude awakening for adult children who still live at home and don't realize what a reverse mortgage will mean after their parents die." In other words, non-borrowing residents will be displaced once the last surviving borrower or parent does in fact pass away. Now, beyond the risk posed to children still living at home is the question of how to overcome such an objection from children. The best approach is to paint a clear picture for the children after conducting a thorough fact-finding. Now, if the borrowers agree, let the children attend the meeting and share with them why a reverse mortgage is even being considered in the first place. Discuss their parents' total savings, cash in hand, and monthly cash flow. Then bring up other possible solutions and test to see if they are even viable. Mom and dad can move and downsize? Well, perhaps. But are they willing to undergo the process of actually selling and moving from the home that they've known for so long? Or children will say that they will meet their parents' monthly cash flow gap. Well, that might be so, but if they haven't done so already to date, chances are this will not happen, especially with those adult children who are already financially strapped. Seek to inform and educate. Do not take the bait of arguing the whole decision, but rather paint a clear picture of the situation using facts that cannot be disputed. Now, how often do you run into resistance from adult children, and just how do you approach it? Share your thoughts and your comments in the comment section below, and have a great week.